Good morning, everyone. Joe Scarice, co-founder and co-host of the Creative Birth Strategies podcast. Also, nationwide direct private lender, licensed real estate agent in New Jersey and Pennsylvania. And today we're going to be discussing the state of the real estate market of SFR, meaning 1 through 4 units, and small balance multifamily, really that 5+ unit, 5 to 12, maybe even 5 to 20 small balance multifamily in 2026. First quarter, just kind of take a glimpse of what we're looking at so far this year. The market reality in 26, very high level positioning is, supply constraint is still the foundation for SFR, very low inventory count, very hard to identify the right deals. U.S. housing shortage remains, about 4 million in units. Home prices are flat to a modest growth. We're probably looking somewhere between 1% and 2% right now. And homeowners are locked into sub 4% rates, lowering the inventory turnover. Result is that SFR 1 through 4 space will remain supply constrained, not demand driven. Affordability is a driving behavior, so cost to own versus rent heavily favoring renting over 100% premium in some cases. And first-time home buyers are pushed out and delayed ownership. This result is the rental demand does stay strong and supports DSCR assets, especially in our non-QM space. Multifamily, small balance multifamily, short-term pressure, long-term strength, massive supply wave between the last couple of years, temporary rent softness, but construction starting to slow down a little bit, future supply tightening. The result? 26, we're looking at more of an absorption, stabilization phase. 27, we're looking at potential growth, rent growth, rebound. Geographical shift, let's talk about that critical insight. The Sun Belt, some oversupply, concessions, and rent pressure. Northeast and Midwest, stable supply and a stronger rent growth. The result here is market selection matters more than ever. And the capital markets are resetting a little bit. Cap rates stabilizing 5 to 6% range. Transaction volume increasing again. And large refinance maturity wall is coming up between 26 and 27. The result here is distress equals selective, not systematic. What does this mean for the real estate investor? This is not a crash market, it's a selection market. And deals exist, but require real underwriting, real liquidity, and real execution. We're not lacking opportunity, we're really seeing an operator separation. So I put some questions and concerns where I'm going to put some answers to this, where you can get a better idea where we're going. Very strategic, for really to understand where we're going as real estate investors and real estate professionals. Is there a shortage of deals in today's market? The answer is no. There's a shortage of qualified operators. Deals exist, but they require structure, discipline, and execution to actually close. What's happening in the single-family real estate market? Single-family through 4-family remains supply constrained. Low inventory and high cost of ownership continue to push demand toward rentals and supporting long-term cash flow. So you're seeing a lot more opportunities for turnkey DSCR opportunities than owner-occupied acquisition. We're almost at a 50-50 basis point between non-owner-occupied acquisition under the non-QM space versus the owner-occupied FHA, Fannie Mae, regulated space. Is multifamily in trouble right now in that small balance multifamily? Not structurally, but it's going through a temporary supply-driven reset. The long-term fundamentals, housing demand and rent growth are still intact. But I am seeing a flooding of more rental opportunity and decreased rental asking prices, especially in the urban settings. A lot of the mid-sized cities throughout the country. Suburban settings are staying very strong and actually higher than in the urban settings based on a 1 or 2 or 3 bedroom apartment, a multifamily. What are the real risks in 2026 do I see so far? Is over-leveraged deals, over-underwriting, and a reliance on pro forma assumptions, and execution risk is higher than market risk right now. Are rents declining across the board? No, but I think rent softness is a market-specific area. Oversupplied areas, the Sun Belt, are soft, while Northeast and Midwest markets remain more stable. Is this a buyer's market? It's a selective buyer's market. Opportunities exist, but sellers still expect strong execution and certainty. What role does debt service lending play in this market? It's critical. DSCR loans allow investors to scale based on property performance, not personal income, making them a key tool this year in 26. What deals are lenders actually approving right now? Stabilized or near stabilized assets with real cash flow, conservative leverage, and experienced operators with liquidity. Where's the distress showing up right now? The answer really right now is the refinance pressure, floating rate debt, and mismanaged assets. Not widespread panic, but it's selective distress, not systematic. And are off-market deals still worth pursuing? I say yes, but it's very relationship driven. The best deals go to investors who can close quickly and perform. And I think the best opportunities are at these local, mid-sized, small networking real estate investor group meetings. Anywhere from 25 to 75 people in a room. You're getting to know everybody, getting to find out opportunities, small, brief discussions with follow-up. I think it's very important. How important is the market selection in 26? I think it's more important than ever. I think local supply and rent trends and economic stability will determine deal success and not just the purchase price. What's the biggest mistake where investors are making right now? Chasing deals without underwriting them properly. Falling in love with projections instead of verifying real numbers. Understanding your comps from a market rent comp to an after repair value comp is how you're going to be buying correctly. And is BRRRR still a viable strategy? And I want to say yes, because I think but it requires real precision. And you need to do the right buy, the right rehab, and the right refinance that actually supports DSCR. What separates winning investors from the rest right now? Execution, the ability to source, structure, and close deals, while managing risk and maintaining liquidity. The biggest mindset shift needed in 2026 for real estate investors and/or professionals. Move from speculation to structure. The market rewards discipline, patience, and long-term thinking, not shortcuts. This isn't a market where you guess your way to success. It's a market where you underwrite your way to it. The structure will always beat the rate. You have to take a sense of common sense to your approach as a real estate investor today. I probably attend anywhere between 4 and 5 events a week, talking with different levels of experience, real estate investors and real estate professionals. And the most common theme is opportunities need to be found in these local events. Meeting people, greeting people, following up with people, connecting with people. Your social media platform has to be solid. That's going to separate you in the second quarter of 2026 as we getting to the back end of this spring market. I didn't really feel like we had a very heavy spring market. I feel it because of all the opportunities with DSCR going up to 85% on purchase on a single family through 4 family and 80% refinance for the investor capturing all their money out on a BRRRR strategy. There's a lot of liquidity with a lot of real estate investors just trying to gobble up as many opportunities for cash flow opportunities because the consumer, the home buyer to own or occupy is diminishing. So these are some of my thoughts today, and I want to appreciate you taking the time and listening in. And that's my update for the 26th. But you could always, we're still offering some great podcasts on Sundays, the first and the third Sunday of every month, 9 a.m. Eastern Standard Time, live on Clubhouse, as well as live on Facebook and YouTube. You could always go to our website, creativebrrrstrategies.com, where we have over 150 episodes provided to you. 2 years now, plus holding this podcast consistently for our followers, and we've now maxed out at 15,000 downloads. So I want to thank you from myself and from Yardell Perkins of Perkatech, our other co-founder of this podcast, to tune in, getting an update on the SFR and small balance multifamily outlook first quarter 2026. This is Joseph Scarice, nationwide direct private lender, licensed real estate agent in the state of New Jersey and Pennsylvania, also CE accredited in providing credits for real estate agents on asset-based lending fundamentals nationwide. Have a great morning, great week. Stay in touch, and my direct number if you need to have a discussion or go over a scenario is 215-290-5108. And thank you.